Hello, and thank you for watching our YouTube channel at Eric Merritt Sells AZ Real Estate. I'm a realtor of Homefront in Northeast Mesa. This is our third East Valley market update video that talks about the 13 different groups. Most of them are cities, but some of them are neighborhoods or different parts of Gilbert that we're going to discuss. So the first part will go into the data of what's happened in all 13 of them. How many homes sold in June, the previous month, average sales price to list price ratios, and then we're going to go into, and then the monthly absorption rate for each of these cities and groups. And then we're going to go into the highs and lows for each one of them. You'll see the highest and the lowest that sold in each of them. And then there will be a link that you can access all the pictures and to get to all the listing information on all of those highs and lows. The third part will go into the synopsis, which will go into the Metro Phoenix area, and we'll compare how many actives we had in October of 2020 versus today, or July 2021, and then how many sold and the absorption rates, so you can see the progression of the absorption rates. And then we're going to compare what happened from June of 2021 versus a year ago, June of 2020, so you can see the high appreciation rates in like Apache Junction and Santan Valley were both nearly 50% in appreciation. Southeast Gilbert was like 43.3%. And then the last part is something new that I've added, where the first part we did have in the last month video where we talk about the types of homes and the different price ranges, and then how they were paid for: cash, conventional, FHA, and VA. And then for FHA, how many little amount of seller concessions there were. So for each of these categories, even mobile homes from 150,000 to 300,000, and then we're going to go into condos and townhomes, 150 to 300, 300 to 500,000. Then we're going to go from single family, 250 to 350,000, which is the hottest market in all the Phoenix metro area price-wise, for the sales price to list price ratio of nearly 105%, all the way up to $5 million and up. So if you find this video very interesting and informative, please go ahead and hit that like and subscribe button and share this video with your friends or anyone that you may know that wants to move to the East Valley communities, and you'll be notified of future ones as well. Thank you very much for watching, and we'll get this video started. Here's our East Valley cities and communities market update video for July 2021. This is going to talk about what's happened in these 13 different groups. We're going to try and go through them as quickly as possible because it's a little bit long on that side. Apache Junction had 96 homes that sold, 8 less than in May. Was 102.2% sales price to list price ratio. After this, I'm going to say SP to LP ratio because it'll be shorter to say it that way. The inventory stayed exactly the same at 0.63 months supply. Highest sold was 950,000, lowest was 46,000, average sales price 357, sits 77. Chandler, 454 homes sold, 25 more than in May at 104% of SP to LP ratio. Went from 0.28 to 0.48. That's why there's a yellow arrow going up. Inventory is going up. Highest sold was 1,900,000. Lowest was 168,000. Average sales price was 526, 587. 219 were active on July 11th. Chandler had, as you will see later in the video, an 81% increase in inventory. The highest city that had the most inventory increase. Interesting. Florence had 27 units less sold than in May. 77 homes were sold at 100.1%, and the inventory stayed pretty much very similar, 0.50 to 0.45. Highest sold was 500,000, lowest was 37,700. Average sales price 322,816. This is the first time that Florence has crossed the $300,000 average sales price threshold. Gold Canyon had 53 homes that sold, 9 less than in May at 99.8 SP to LP ratio. Went from 0.85 to 1.19. Highest it sold was in Superstition Mountain Country Club at $1,795,000. Lowest sold was $138,000. Average sales price was $523, $522. In Mesa, we had 905 home sale, 9 less than in May. Very small decrease, considering a large amount of sales. 103.4% SP to LP ratio, and then it went from 0.47 to 0.54. Not too much of a change there, an equal sign. The highest sold was $3,700,000. The lowest was $8,900. And this should be $8,900 at Northeast Mesa because they're the same. Mesa average sales price was $413,761. Northeast Mesa 94 homes sold, 12 less than in May at 103.2% of SP to LP ratio. The highest sold was in Los Sendas, which is Northeast Mesa at $1,525,000. Lowest sold was $8,900, not $7,900. Average sales price was $565, $598. 84 were active on July 11th. Went from 0.63 to 0.89. That's why there's a yellow sign up. Gilbert had 495 homes sell, 25 more than in May at 104% SP to LP ratio. Went from 0.30 to 0.48. Highest sold was $3 million and 8529 cents. And the lowest sold was $242,500. It was an Icon Hayfield condominium at Gilbert and Houston Road. Average sales price was $580,113. North and Central Gilbert, same numbers. The highest and the lowest were the same, $3,242,500. 262 homes sold. North and Central Gilbert, are the zip codes 85233, 234, and 296. Anything north of Ray Road is considered North and Central Gilbert. So 104.3% SP to LP ratio. Went from 0.45, 0.47. That's why it's got an equal sign. Power Ranch had 37 homes that sold, 9 more than in May. That's the most amount of homes I've ever seen sell in Power Ranch in 1 month. Normally, Power Ranch has 28 to 30 or 27 to 30 homes that sell. This was 37. SP to LP ratio, 104.9%. So if you got a $500,000 house, expect to get $25,000 over list price. Basically what that means, 5% over. The months of supply of inventory went from 0.29 to 0.35, not much change there. Highest sold was 865,000, lowest was 345. Average sales price in Power Ranch was $540,700, and only 13 were active on July 11th. Southeast Gilbert did have an arrow going up, went from 0.31 to 0.50. ISO was $2,900,000. Lowest was $323,794. It was a two bedroom, two bath townhouse, brand new that sold. Average sales price in Southeast Gilbert was $616,568. 117 are active on July 11th. Queen Creek, 203 sold. The highest was $1,650,000. 281 was the lowest. And the average sales price in Queen Creek was $554,648. That is $60,000 under Southeast Gilbert. And that is, I believe, Queen Creek and Northeast Mesa were very, very close. Let's see. Northeast Mesa was $565 and Queen Creek was $554. So Northeast Mesa beat Queen Creek by $10,000. That's it. Santan Valley is the biggest attention right here. 244 homes sold, 5 more than in May. 102.9% SP to LP ratio. Highest it sold was $1,520,000. Lowest was $114,000. Average sales price, 420 big ones, 420,402. This is the first time that Santan Valley has gone over the 400,000 average sales price threshold. 0.27 months of supply to 0.47. So it is, the inventory is creeping up there. Tempe had 241 homes that sold, 34 more than in May, 102.8% SP to LP ratio. And the highest that sold was $1,725,000. The lowest was 159,900. Average sales price 444.77. And the monthly inventory supply amount went from 0.53 to 0.66. So it did go over more than a tenth, so that's why there's a yellow sign there. This is our first commercial break here of the East Valley. This is what you see, the Botts Canyon. It is east of Florence. The road that goes along the Gila River, and it will go east about 10 to 12 miles. You need a high clearance vehicle, four-wheel drive, to handle rough terrain like this. This is where the four-wheel drivers challenge their skills to see how steep they can go up or down. The Martinez Mine is right here. It's a very old mine. It's not operational, of course. And then this beautiful structure is a really nice sight to see when you're off-road on the trail. The coke ovens are here, and they used to make stuff in here a long time ago against the Gila River. These are my two step boys that are inside the kiln, and then we're going to go into the water at the Gila River next commercial break. Now we're going to go into the highs and lows. This is the highest that's sold in Apache Junction, 950,000. This is the picture of it. This is the lowest, 46,000. I'm going to touch on the highest, some of these, not all of them. Chandler, this is the highest. It sold 1,900,000, 5 days, and 111.8% of list price. Gold Canyon, this one, beautiful home, is in Superstition Mountain, 1,795,000, 138 days. It sold for full list price, 100%. And this one in Mesa was 3,700,000, 13 days, 94.9% of list price. And then this is the mobile home, the lowest that's sold in Mesa, $8,900 right there. That is definitely on a lease, park rent. Sorry. Northeast Mesa, the highest that's sold. Actually, this is a mistake here. It should be 1,525,000, 158 days, 90%. And then the highest that's sold in Gilbert was $3 million, 37 days, 93.8%. Same with North and Central Gilbert, same thing. Same with the townhouse, with a condo in Icon, Hayfield condos at Gilbert and Houston Road, 242.5, 30 days at 103.2%. And then this one in Power Ranch sold for $865. It's a T.W. Lewis house, sold in 20 days at 111.6% of list price. And then here's these condos. I remember doing an open house in these townhomes back in 2017, and these were in the 220, 230-ish. Yeah. And this one sold for $345. 8 days on market, 98.6% of list price. This is Southeast Gilbert here. The highest it sold there, 2,900,000, 45 days. It's 10,438 square feet, 6 bedrooms, 7.5 bath. Queen Creek, this is the highest it sold here, 1,650,000, 61 days at full 100% list price. Santan Valley, this is the highest, 1,520,000, 64 days on market, 84.4% of list price. And Tempe, 1,725,000, 50 days at 100% of list price. If you'd like to see all the pictures to all these and all the information, all 26 of them, please copy this link into a separate window, and it will open and you can see all the pictures to these listings and the listing information. So what I'm behind is a picture on the Gila River, and these are my two step boys here, Alejandro and Roberto. They're on the side of the Gila River at Botts Canyon. So this is south of Botts Canyon and north of the boulders. And I'm going to put some other pictures into this market update video to show you that. This is the types of transactions, all home types, price ranges, and the payment types. So you'll see mobile homes from 150,000 to 300. Average sales price was 215,770. They sold for a full list price, 100%. And the 182 of these mobile homes sold. Out of those, 108 sold cash and conventional, 39 were FHA. So just over 20% were sold FHA. And out of those that were sold FHA, only 6 had seller concessions. So that's So if you want to buy even a mobile home, you better get a conventional loan. Otherwise, it's going to be a long, hard road. Condos and townhomes from 150 to 300,000, they were 101.8%. 688 of these sold throughout the whole Metro Phoenix area. 457 were conventional, 188 were cash, and 52 were FHA out of 688. So less than 10% were FHA on condos and townhomes. Condos and townhomes 3 to 500,000, same thing, 101.4%. 467 of these were sold. 300 were conventional, 114 were cash, and only 7 were FHA. Single family homes, this is the most competitive market in the Phoenix area, which it always has been. 250 to 350, 104.5% of list price. 2,246 of these homes were sold. 971 were conventional, 652 were cash, and 111 of these were VA. 349 were FHA out of 2,246. So that's like 15% were FHA. Single family homes, 350 to 500,000, 103.6% SP to LP ratio. 3,007 of these homes were sold in June. And out of those, almost 2,500, 1,763 were conventional, 713 were cash, and 127 were FHA. So you go all the way, once you get past $1 million here, you'll see it goes to less than 100%, 99.3. And then you go to 3 to 5 million, it drops down to 96.5% SP to LP ratio. Out of curiosity, the homes at 5 million and up, there was 96.7% sales price to list price ratio. Only 16 of these homes sold, 2 were conventional and 10 were cash. So I thought that's interesting. For all buyer consultations from now on, everyone will have this information because you need to know what you're up against, especially if you're a new first-time home buyer. You need to get a conventional loan. If you have to pay a full percent higher for a conventional loan or 0.75%, so be it. At least get into the house before it gets even higher. And then you can always refinance later and drop your payment back down. But at least you're getting the equity, because if you don't buy a home, you're not getting the equity at all. That's guaranteed. So it's very important to know what you're up against. And if if you're a seasoned buyer, seasoned seller, so forth, you still need to know this information because you need to know what the sales price to list price ratios are. You're going to be cash and conventional anyway, but you need to know what to expect to pay based on these price ranges and based on the areas that you're looking at. Okay, this is something that I've added for this month. This shows the active inventory has risen from June to July. So we're going to go into these. First City, Chandler had the highest at 81%. 121 were active on June 8th, and 219 were active on July 11th. Gilbert had 71.9%, 72% increase in inventory. 139 were active on June 8th, and now 239 are active on July 11th. Northeast Mesa only at 25.3%. I think that was the lowest in the East Valley. June 9th had 67, and then July 11th had 84 homes. Queen Creek had 82 on June 8th, and now 138 homes on July 12th. Santan Valley had 64 on June 9th, and 114 on July 12th. So I'm just showing you all of these areas where the average sales price is 350 to 600,000. The active inventory is rising. Now the luxury markets where the average sales price is $1 million and above, they're not increasing. They're actually carefree decreased by 1. Paradise Valley, which is a $3 million average sales price market here, only rose 4 units from June 9th to July 11th. Scottsdale went from 704 on June 9th to 772 on July 11th. And their average sales price is getting close to $1 million now in Scottsdale at 936, 567. This is the railroad bridge after you cross south of the Gila River, and this is the last commercial of the East Valley video. So this is the Boulder Fields that are about 6-7 miles to the south of the Gila River. It's, if you want to go east of Highway 79, you go 12 miles east on Florence-Kelvin Highway. It's a very nice place to take the family there and enjoy the views. Now we're going to go into the synopsis here. And this is for comparing October 18th, 2020, we had 8828 active. And then we had a tsunami of buyers, which I've said in other videos, that came in 35, took our inventory down 3,500 less to 5,385. Then February, March, April, and May, we were below 5,000 active. Last month, for the first time, we went over 5,000 to 5,582 on June 14th. And this month, only 6 days ago, we had 6,044. Today, since it is Monday, we have around 6,700. So we'll see how many of those actives go into pending and under contract status and bring the number of actives down. As long as it stays over 6,000, we're going to have the same trend continuing, which is what I expect, and which is what I've heard from others. So we closed 10,187 units last month, which is 500 more than in May. Yet our inventory did go up. So our monthly supply pretty much stayed the same at 0.59 from 0.58. So if this trend increases, then I expect in the next 4 or 5 months, or definitely by the end of the year, we will have a month's supply of inventory again. So for you sellers out there that are thinking about making a move, now you can start to think about it, because it won't be quite as hard as this insanity that we've had the last 3-4 months of, bidding stuff 10 to 20% over list price. Hopefully it's going to be less than that. This is a Crawford Market Index. You can see all these numbers are in red. The demand has gone down except in Cave Creek. Like I said, Cave Creek is a luxury area, so the demand is not going down that much. Paradise Valley only dropped 4%. You see Queen Creek dropped 20% in market index in the Crawford report. Tempe dropped 15%. Mesa dropped 13%. Chandler dropped 13%. So that just gives you an idea of what's going on. Now in the East Valley, this is comparing June of 2021 versus June of 2020 and the appreciation rates. So this column over here, I'm not going to go into all these numbers here, but this just shows what happened from June of 2021 versus May of 2021, the increase or decrease in transactions. Queen Creek had a 28.5% increase in transactions, actually. 45 more homes sold. That's a highlight there. Tempe had 34 more homes that sold. North and Central Gilbert also had 34 more homes that sold. But Florence had 27 less homes that sold, which is interesting. Apache Junction and Santan Valley both nearly had 50% appreciation increase from a year ago. Apache Junction was 238,181 when we came out of the shutdown from COVID-19, June 2020, 238,181 to 357,677, 49.7% increase. Santan Valley went up 49.8%. From 280,559 to 420,402. Santan Valley at the peak of 2006 was only 249,587. So just keep that in mind. Take a look at these numbers there and you will see what's going on as far as the increases. North and Central Gilbert went up 43.3%. Southeast Gilbert went up 43.5%. And Northeast Mesa went up 26.7%. It was the lowest of this bunch here. Tempe was right behind it at 28.4%. So that pretty much concludes our East Valley market update. I know it's a long one because there's 13 different groups here, but it's very good information as far as to know what's going on with our inventory and why our inventory is going up. Our inventory is going up in these bread and butter price ranges because what was a $400,000 house 6 months ago has now turned into almost a $500,000 house. or $480,000. And so the buyers right now, they're sitting on the sidelines and saying, we're not going to pay this, or we're out qualified. Maybe you're qualified at 420 or 440 and we're getting beat. And so the type of home that you would like to have isn't possible in certain price ranges. But for people that are coming from other areas that have had multi-million-dollar homes, like in Southern California, San Diego, or really nice areas of Los Angeles, Orange County, if they had a $2 million home at 1.5, it doesn't matter to them because they know they're getting more home for their money, even in Paradise Valley or North Scottsdale. But for bread and butter buyers, that's why the inventory is creeping up, because you can't buy as much of a home as you could even 6 months or a year ago. And so they're waiting to adjust to see what's going to happen. And if you own those homes in that price range, that's great. At least your equity is catching up, is following the rise. So yeah, your home is worth more, but the home that you're going to be buying is also, just as expensive. So if there's a trend to where it makes it a little easier to buy something where you need more garage space, or you need a downsize, or you need to get out of an HOA and get some land, get more garage space so you're not bothered. Those are strong motivating reasons to sell. So if you have that, I can definitely help you with that. So that concludes this video. And if you find this video very interesting and informative, please go ahead and hit that like and subscribe button and share this video with your friends or anyone that you may know. And thank you very much for watching.